Hi traders, in this video we're going to go over finding trading levels using confluence of Fibonacci retracements, Fibonacci projections and horizontal support and resistance as I discussed in this section. So here again, putting it all together, if we identify the major swings in the market from the very low to the very high, let's draw our retracement tool on that, swing up. And you can see we retrace down to the 38% fib level here, and then we rally. Now once we start to rally, we can then look for potential projections to the downside. So you can see we've hit the 38, so we could find something possibly at the 50, 618, 79, 886. So let's see if we can find some confluence. If we look at this swing down and we draw our fib tool on that, from the high to the low, we have standing out the 50 retracement with the 127 projection, as well as the 618 and the 1618 level. Now if we have a look at these areas here, you can see we have horizontal support resistance around this area as well. You can see we get some good price action around here. Nice level of resistance. Price breaks out of this quite aggressively, so we have a bit of confidence there. But if we have a look further down, you can see we have this level in here that looks really interesting. See how we have price break away like this, and we also have a nice level of support and resistance across here. So that's also very interesting. Remember, we also went over refining our support resistance level. So if we have a look at this level right here, see the last bearish candle before price breaks away. Paying close attention to that. See how it comes into our confluence area of the 618, 1618 and horizontal support resistance, so we can actually fine tune the level right down into this area here. Okay, so if we just compress that chart once again, if we mark this little block off there, that's something I want to definitely pay attention to. You can see further up we've got another level there, as well as there. See, prices come down, hit this level here and reacted very nicely. So we've got this level here, but we don't have any confluence, and this level here. So here again, not a bad level around the 50. And remember, we're looking for patterns at this level. This is a higher time frame level. So in terms of stop placement, if you're going to trade the larger time frames like this, you'll always need a bigger stop. So if we follow price down, you can see price spikes through this area here. Okay, so we may have found a pattern on the smaller time frame, and we get a bit of a bounce off this area. So once again, identifying those key areas of confluence on the higher time frame. We follow price along here. You can see price now breaks the low, and we now have price approaching this key area right here that we're interested in. So price comes down, spikes into the level. Look at the area. If we just move this horizontal level across to the last bearish candle right there, you can see how price reacts basically to the pip. Here again, we're looking for patterns around these levels on the smaller time frame, not necessarily wanting to trade off the level. Okay, so very nice little reaction off there. Here again, when we get to patterns, there actually looks like there was a little pattern on the smaller time frame on the hourly chart, which will stand out, which is the head and shoulders, but we won't go into that right now. So I hope you find that helpful. Once again, we take the major swings that we identify, Fibonacci retracements from the very low to the very high. We then look for Fibonacci projections from the very high to the very low. Price retraces to at least the 38%. This one comes to the 618. We've got two areas, one with a 50, 127 horizontal support resistance, and then the next level down, 618, 1618, we have a refined area of support resistance here, and you can see we get a nice reaction. Here again, we're not looking to necessarily pinpoint the exact turning point. Remember, these are zones as discussed before, so we're looking for patterns around these levels. We also look to limit our risk. Hope you find that helpful.